Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, so daily chart. Here's your 58. The move down to 69 and change on Monday. The bulls have fought back a couple of days, and you got your high here at 24. That coincides with the blue line, the 9-day moving average. I got a question emailed to me this morning from a viewer asking how I use the 9-day to manage my trades. I don't use the 9-day to manage my trades. I use the 9-day right now. I've used many things over the years. 9, 20, 50, 100, 200. It doesn't matter to me. Upper band, lower band, VWAP. It doesn't matter. What I use is whatever particular line the market seems to care about now. And over the past 2 to 3 months, it's cared very much about the 9-day. You can see that the 9-day has been support for a long period of time. And if there's going to be any character change in this market, if you're going to see any kind of an actual retracement, similar to what we saw back in September or what we saw back in July, if you're going to see any significant retracement, that blue line, that 9-day, is going to become resistance rather than support. That's what the bears are trying to do this week. The other side of that is what's going on down at the daily midband and monthly pivot. I ended up long last night, 08. I shorted the open yesterday and I got nailed. And then we just kind of, it was like back and forth, red trade, green trade, red trade, green trade. I ended up about a handle, honestly, yesterday, which I'm not, which is a first world problem after 24 handles on Tuesday, and we did 32 in the room on Monday. So Wednesday was not a good day for me. We ended up long 08 last night, which turned into a really solid trade for us. So we did about 10 to 12 overnight, depending on where people got in. So we've had a nice start to the day. But that was a byproduct of the inability of the bears to convert daily midband and monthly pivot once they got back down there. They traded down to it into the close. They hovered around it overnight. They went up to 24, but no farther. So this is potential resistance at the 9-day. So you got it here, and you've got it here. And you can see that on the daily chart. You can see what it's trying to do. So I don't use the 9-day to manage my trades. What I am using the 9-day to do is to give me an idea, short term, who potentially has control over the tape for another leg. So it's been the bulls for a while. It doesn't mean that it's the bears now. But if the 9-day holds and you can take out 69.5, you will get a deeper move similar to the one you got in September and July. But I'm not using that to manage any particular trade. I'm not a swing trader. I'm not a position trader. I've done that over the years. I'm pretty good at it. But what I have found is by doing the things the way we do it in the room, we outperform those kinds of trades because so many of those trades go red. So many of those trades get added to, and they just turn into just absolutely mind-consuming psychology. It ends up, you feel like you're on your psychologist's couch all the time. You start losing sleep, and everybody's been there as a trader. I let all that stuff go. And what we have found on a handle basis, we outperform those trades anyway. So back to the hourly. So the key is here. We're in a battle between 24 and basically 08. You win this chunk, you win the next leg because you will have converted either to support or resistance, the 9-day, monthly pivot, and the daily midband. Those are 3 big inflection points. That's what today's about. So we'll be watching that into the open. We're trading 18, 24 on the up, 8 on the down, and we'll take it from there. All right. Everybody have a great day. More stuff out on social. We open in 9 minutes. Check out the room. Come trade with us. You'll love what you find. Trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.